All right. Well, hello, everyone. Happy belated Turkey Day or Thanksgiving Day, if any of you ate turkey. I'm still feeling the effects of mine. So welcome, everyone, to today's Government Pricing Overview webinar, hosted under the Women Veteran Entrepreneurs Initiative, or WVE for short, of the Morgan State University Entrepreneurial Development and Assistance Center. We exist to provide training, resources, and developmental opportunities to minority women veteran, minority women military spouses, and minority women seeking contracting opportunities with the federal government and other government agencies and in the private sector. Now, that being said, events such as this webinar and our upcoming April 2022 one-day summit are open to you all, the public. And we're grateful to have you with us today and assure you that our time together will be definitely worth the price of admission, which for you all was $0. And quite frankly, that's one of my favorite prices. So before we get into it, I would like to basically communicate a few housekeeping items. As previously mentioned, this webinar will be recorded for future use, and when it is prepared, will be posted to the EDAC Morgan Women Platform webpage. I will soon post it in the chat. And should you like to peruse the previous webinars and other aforementioned content, such as our podcast and our previously completed bootcamp session, those of you who were in it know who you are, then you will also be able to use that link to peruse those details. Second, please mute your microphones as the presenter goes on to present her amazing content. I have gotten an overview of it, and let me say you will definitely get a lot from it today. And when Nelia begins her presentation, I will monitor the chat and take note of the questions for Q&A throughout the presentation. She will answer your questions as we go, so please feel free to be active in the chat with your inquiries, and we'll make sure that you're heard. Finally, you spoke and we listened. On our previous feedback forum for our previous webinar, we had individuals mention that they would like to hear a webinar on pricing, and this is the result of hearing you all. So on that form that I will again post in the chat, you will have another opportunity to voice exactly what you want to hear for future webinars, so that way we can consider it and get the best speakers for you, just like today. Now, allow for me to introduce Nelia Jones. Nelia is a proud alumna of the University of Maryland Global Campus, where she first obtained her Bachelor of Science in Accounting and then her 2 master's degrees, one Master of Science in Management Accounting and the other a Master of Business Administration. Nelia is also the president of Jones Lawrence Crisp and Associates Incorporated, or JLC and Associates for short. It's an over 13-year-old administrative services organization established to provide a solution for small businesses that have a need for an infrastructure, but don't have the resources to maintain a fully operational corporate staff. This seasoned organization has been a beacon of hope for many startup companies, and they pride themselves on being the small business that understands the needs of other small businesses. Among the variety of services that JLC and Associates offer, some are accounting and booking services, payroll, and pricing. Clearly, she is a wealth of knowledge and one of the best speakers that we could have chosen for today's event, and we are ecstatic to have her be with us. Now, without further ado, allow for me to bring to the virtual stage, Ms. Nelia Jones.
So much for the wonderful introduction. Hello, everyone. As previously stated, my name is Nelia Jones, and I am the owner of Jones Lawrence Crisp and Associates. Our specialty is government contracting. I've been dealing with government contractors and started out in government contracting for over 20 plus years. So my hope is that I wasn't sure what level we would have on the webinar. So my hope is that I'm giving you a foundational information for the pricing and then providing strategies of how you get to a competitive pricing submissions to submit to your customer. So we'll end up, for the agenda, we'll end up going through the pricing components, the indirect pools, strategies, tips and tricks, and then any questions that may have not been answered as we've gone along through the presentation. We'll leave some time at the end to also answer additional questions. So when you're starting with pricing, everything is going to stem from your profit and loss statement. So this is another example of why you need to make sure that your financials are in good order, that you're constantly keeping track of your business expenses, and that you have an accounting software that will allow you to be able to segregate your direct costs and your indirect costs. So your direct costs are going to be anything that can be directly associated with the contract, whereas your indirect costs are going to be items that they are affected by the contract, but you may not be able to bill the customer for those exact expenses. So when you're working on your pricing, the foundation of your pricing comes from your direct labor. So your direct labor costs are going to be the salary that you pay the individual, and it's just their base salary.
I sent this one to you.
It's just their base salary. It does not include any benefits, PTO, health, dental, any of that that you would pay your employees. So you're going to start with your direct labor, the wages, and then you'll build upon that. So once you have the direct labor, now you move into what your indirect pools are. So you might hear people say, what's your indirect rates? And so that's just a compilation of your fringe benefits, your overhead, your general and administrative costs, and then if facilities fees. Most small businesses, even if they are dealing with cleared individuals, will not have a facility fee. Most facility fees are if you have a SCIF, and so those individuals, so a SCIF is a clear facility for your employees to work in, to be able to handle classified information. So that may be something where if you have a SCIF that you might have a facility fee, or if you have a location that houses only your employees working on a contract. But facilities fee is normally not used a lot in a service-based business. Profit and fee, self-explanatory. That's the profit, the money that goes back into the company to continue to, you invest in it so you can continue operations and continue to cover the expenses of the business as you go along and grow. All right, so here in this next slides, we'll end up going through a breakdown of the pools. So for the fringe benefits, that is your benefits that your employees have. So you'll see that'll be like your holiday pay, your vacation, your payroll taxes that you have to pay, retirement benefits, anything that's associated with the employee that you would need to pay. Now, the thing is, when you're setting up your chart of accounts, you want to make sure that you have these overhead buckets set up, because this will help make it easier when you do have to start calculating your rates to build up your pricing. If you just have everything combobulated, then it makes it harder and you're going to have to pull out each one. So you want to just make sure that you have your items set up and your profit and loss statement set up with buckets based on the indirect rates pool. So the next cost that we would have would be the overhead cost. So your overhead costs are going to be costs that cannot be directly billed to the customer. So you may have a solicitation that says the key personnel is a program manager. However, you'll notice on the pricing spreadsheet that the program manager is not billable. You would then put that under your overhead, and that would be under the program support category, or you could call it program manager. But again, it's just so the overhead pool is so you're able to capture costs that are associated with the customer, but you may not have a bill rate that's associated with it. But you want to keep this also concise so that you know what your costs are when you are going to bid. And if you get audited, you can clearly define how you came up with your overhead rates. All right, so your general and administrative costs. these are costs that you would have regardless if you had employees. So these would be like your rent. This would be like your telecommunications for like your internet, your telephone. Any cost that it takes to run the business, even if you were if as the owner, you're the only person working, that would be the cost. So the owner's salary would go under general and administrative as opposed to a direct labor. And so let me go back for direct labor, that would be a cost of goods sold because it's a direct billable that's being reimbursed back from the customer. So you want to make sure that you're able to differentiate the wages of your corporate staff and the wages of your direct labor staff. So direct labor are the individuals that work directly on a contract. So then we get to expenses that are they're unallowable. So they may be tax deductible for tax purposes, but they are not allowable expenses when you are building up your rates to give to the government. For instance, like if you have a sales and use tax, of course, if you're paying the government sales and use, they don't want you to be reimbursed for a tax that you are supposed to pay to them, right? Some of these unallowable expenses, you see we have one client has meals here. So those are personal meals. So you want to just make sure in government contractors, certain agencies, sometimes you want to make sure you differentiate between your business meals and your personal meals. That way there's no conflict. All right. So then, so the fringe, the overhead, and the G&A are all used in calculating your indirect rates. So then on the next slide, we'll actually start going through doing a build-up so you can see how to get to each rate. Again, when you're doing your indirect rate, so in your setting up your chart of accounts, some of these items, some of the accounts that you put in your G&A, overhead, and fringe are just going to be standard. They're going to be obvious, but then you'll have some that may not be as obvious, and it's going to be an individual decision on where you put it at. For example, employee morale is a category that you might see or might use, and that's basically if you're giving a holiday party or you've sent flowers for an employee who may have lost family, or you've done like a spot award or something like that. You can put that in employee morale.
You have a question.
Oh, yes.
Jeanette asked, how can we justify the unallowable cost on the report?
So you don't justify. So that's why you have it in the unallowable expense account, because you're showing the government, hey, I understand that these are valid business expenses for the IRS purposes, but they're not valid expenses when I'm creating my rates to send to the government. So that's why they're called unallowable expenses, but they're only allowable when it comes to government contracting and you building up your pricing. But it's still an allowable business expense for tax purposes. All right. So once you've had your chart of accounts broken out between direct labor, fringe, overhead, and G&A, now you need to come up with your base numbers, which will allow you to divide what that pool was for. So we're starting with the fringe benefits. So with the fringe benefits, what we need to figure out is what is our base that we use to come up with these what we use to come up with to multiply by the direct labor, right? And so here's what your base is. This is just standard. These are just your standard accounts, but you want to make sure they're broken out. So now all of your overhead costs, and if you'll see, these are only labor accounts that are being used, right? They're going to be your G&A labor, your overhead labor. Overhead labor could be like your program manager. You may have a contract administrator. Those things fall under overhead labor. So what you'll do is once you build up this component, once you get these rates, So these rates, when you do have your profit and loss statement, you can either pull it for a period of time, for a month, a quarter, a year. This one is for, the example that I'm using is for a whole year, which is why these numbers look a little high. And so what you'll do is you'll take the total amount. Again, everything is going to come from your profit and loss statement. So these numbers are being derived directly from your profit and loss statement. You plug them in and you get the total. So once you get this total of the 1828 for the total base components, all we're doing is taking the total fringe expense that we had from our profit and loss statement. So this 556 is the total expense for a year that was paid to have employees, if that makes sense. Okay. So then for
you have a question? Yeah, you actually have two. You're doing a great job, by the way. So your first question is, what is a competitive fringe rate?
We're gonna get to that, and everything is going to depend on the agency. And then it's also going to depend on the type of work. It's going to depend on the clearance. So what we're doing now is setting the stage for what your actual indirect rate is. And then we're going to give you the strategy to tell you how you adjust it. So that one really is going to depend on this. And your indirect rate, you might have an indirect rate, a multiplier of a 1.8, but right now in this market, a 1.8 is not going to be competitive. So what you're going to have to do is kind of play with your numbers to reduce maybe your G&A or your overhead to get it to a space where it would be competitive. But again, that goes back to the type of solicitation and the agency, and they'll provide you like the max value or what they expect this solicitation value should be. So then that's also your starting point as well, because you can't go above that number.
Thank you for that. And you actually ended up answering the next question. So great job.
Okay. All right. So then this is just a spreadsheet for the general administrative components. Again, it just provides you what the base is that you're going to use to divide what your general expenses are. So right here on this customer, their G&As are 31.93%. That is a very high G&A. And so when you see something like that, and your G&A is that high, you're definitely going to have to reduce it. So your G&A, you typically want to have a G&A between 10 and 15%. Depending on the customer, you may be able to get away with 20%. And that's just so that your price will be competitive. But just keep in mind that as you're doing these prices, the assumption is that you have multiple contracts to help absorb these costs as well. So this is not based on just you having one contract and that one contract supporting all of the needs and still providing a profit. All right. So now once we've had the breakdown and created, determine what our percentages are, now you start doing the actual buildup of the rate. So if you see here, I have the direct labor rate. So this is the hourly rate that I would pay the employee. Here is the cost to my company per hour for under fringe. So this, with a fringe of 30.43%, this is saying that it costs me $16.30 per hour to have this employee. So this $16.30 per hour is going to be a cost of like your payroll taxes, any employer paid benefits that you have, your workers' comp, timekeeping expense, payroll expenses, all of those things that we saw on the other slide. So then if we're looking at overhead of 14.17%, this is saying that this cost, my overhead costs are $9.90 for every hour that this employee works. Now this $9.90 is going to be what covers your programmatic support, your contract support, any other overhead costs that you may have that cannot be billed directly back to the customer as a line item. So then we have the G&A, which is the, G&A is a $31.93 31.93%, which means that I'm spending $25.46 per hour to support this employee. So that G&A cost again is going to cover like your rent, the owner's salary, your telephone costs, any other office corporate staff salaries that you may support, that you have hired employed. So then you get your total bill costs. Of course, you do 5%. You could do 5 to 10% for fee. I normally do a 5% just as a call out, because I know as I'm doing my pricing, I'm going to end up cushioning my overhead and my fringe to also give me additional profit, right? But you don't want to call this out when you have to submit a proposal and they see that you're getting 15 to 20% in profit, because it's not in their mind. That means you're not giving the government your best offer. All right, so then once we add all of this up, now we get to our base bid rate that we have for the customer of $110.46. So this is the rate that we're saying that we need to employ this person before we start looking at the solicitation, before we start considering the customer, and before we start understanding the incumbent on that current work. So, and then we start massaging the price from there. All right, so when you're looking at solicitation, your pricing strategy is going to be determined by what type of solicitation it is. So my favorite solicitation of all is the best overall pricing. So this one allows you to be competitive with your pricing while still making a decent pricing, a decent profit. So best overall price means the government is going to look at the cost. They're going to evaluate it for price reasonableness. They are going to look at your technical proposal and your management approach to make sure that with the cost that you provided them, that you're also able to actually execute on the contract without any issues. The next one is lowest price technically acceptable. So this one is being used more now than it has before. So lowest price technically acceptable means no matter what, the lowest price is going to win, as long as your proposal provides them a level of confidence. The technical proposal provides a level of confidence that you'll be able to perform on the work. Now, there's some times where they'll just say lowest price technically acceptable, and you won't even have a technical proposal to submit. So when you're dealing with solicitations that have lowest price technically acceptable, you want to make sure that A, you can perform in that work, you have the past performance to do it at the price that you're willing to do it for, and that if you're going to submit a lower price than you normally would anywhere else, that you're doing it for a strategic move and not just because you're just trying to get contracts. So that's one thing I want to make sure, that when you're going after contracts, you want to make sure that they're strategically positioning you and you're not just throwing everything over the fence, just trying to get a contract, because then you'll set a reputation for your company name. So definitely be strategic about the opportunities that you go after. The other type of contract that normally falls in line with LPTA is Service Contract Act. These are labor categories such as like administrative assistant, some IT positions that are on what's called a wage determination. So what this does is the government says, for this period of time, for this location, here's the rate the bottom rate that you have to pay an employee. So let's say for an administrative assistant, the bottom rate that you have to pay is $21.25. That's your base salary. But then in addition to that, they also have to pay health and welfare. And this is where a lot of people get caught up at, because depending on how long that person has been on the contract and under a SCA, you may not have accounted for the amount of benefits that you need to provide to them. So just saying that I'm just going to take the health and welfare amount may not put you in the clear to follow the SCA regulations. So you want to make sure that if you do have an SCA contract, that you fully understand what you're getting into and what that requirement is from a financial perspective. For GSA schedules, I wanted to point this one out. If you have a GSA schedule, that means you set the rate for what you are willing to offer the government. And this rate says that this is your best offer that you're giving to the government. This means, let's say you give the government a program manager for $115 an hour. That's your fully burdened rate. That means your direct labor plus your fringe plus your overhead plus your G&A. That means if you go to a commercial customer, if you come to me as Jones Lawrence Crispin Associates, and I say, please give me the rate for a program manager, that means your rate has to be over $115 an hour. You cannot give another customer outside of the government a rate lower than what you've given to the GSA. All right. So now we get to, we've gotten the burden rates of what we need. Now we get down to how we determine how much we take off of the rate that we really need, or the rate that we really want to cover all costs and have a good margin on what we're billing to the customer. So first you want to look at the NAICS code. So in government contracting, there is a number system that they have, and they have set aside size standards attached to them by either the value or your employee count. So with that NAICS code, sometimes the NAICS code, if you have a NAICS code and the size standard is 8 million, it's more than likely the value of the contract cannot be over 8 million. So that sets the stage for you to know, okay, 8 million, I know I need to absolutely be below that. If you see a solicitation and they're telling you that the max value or the NAICS code is 16 million or 8 million, your price should never be 79999. It should never be so close to the value that they know that you really didn't look at. And if you're pricing a solicitation and you know you need to be over that value, then that's a clear indication that you probably should not go after that solicitation unless you have a strategy in place for going after that work. The next thing I do is always look at the Q&As and make sure you ask a question with the solicitation. You always want to look to see if they let you know who the incumbent is and get the contract number. Once you have the incumbent contract and the contract number, then you're able to do the research to say, okay, this is how much the government previously spent on the contract. So now you know that expectation is that you're going to discount that about 10 to 15%. Sometimes you're only going to be able to discount that by like a 5 or 6%, and that's okay because it's still a savings, but you just want to make sure that you're able to go through the numbers and that the numbers make sense. So when you're going through the solicitation, so the sections that I look through is the section B, which is the pricing section. So this outlines what you're going to actually be pricing. Is it going to be PM work? Is it administrative work? So forth. Section L is the instructions, which says to you how the government wants to receive your proposal, right? So in that pricing section, if you see something that says pricing narrative, what the government is asking you of the pricing narrative is, how did you come up with this buildup, right? So that goes back to the fringe, overhead, and G&A that we just saw previously. And they're also asking you, what did you use to get your direct labor rate? So did you use salary surveys? Are these historical, did you use historical payroll records to come up with your base rate and then build up from that point on? You also want to learn to look at section M, which is the evaluation criteria, because sometimes there are nuggets in the section M where the government is letting you know what they're looking for and what they are going to evaluate that you may not see in section L. Prime example for section L, we were working on a price cost volume, and they said they just wanted to see the cost, right? So we had the section B all prepared, nothing else. That's it. Oh, we're done. We thought that was going to be an easy proposal. Then we went to section M, And now we realize that, okay, no, the government actually wants to see the benefits that are being proposed to the employees, what percentage the employer is going to pay, how much of the PTO. So they wanted to, and they also wanted to see that the contractor had the financial capability to make the payroll at the level of this contract. So just make sure that you are paying attention to section L and section M when you're going through your pricing, because that's also going to help you adjust your pricing either upward or downward. All right, so when you're pricing as a prime with subcontractors, depending on the work. So if this is new work for you and you're dealing with a subcontractor that has done the work before, sometimes it's good to wait for the sub to give you pricing, and then you kind of build your pricing on that. You add your little fee on top of that, but you still want to do your due diligence to make sure that you're doing the analysis within your own company to make sure that if the sub for some reason can't fill the positions that you've allotted them, that your company can still sustain those employees and provide them the benefits that's necessary. You never want to let your subcontractor price you so high, have their prices so high that they price you out of the competitive range. So that's why you want to make sure you do your due diligence too. So even if you're waiting on the subcontractor to bring you the cost to provide you their rates, you look at it and then you do your analysis from there. Also, very rarely should you accept the first rate that a subcontractor gives you, because they're always going to be high. You're always going to try your hand. That's with anyone. So you want to just make sure. I would take, so when they send the rates, you know, the subcontractor sends their rates and you can hold their rates and it still provides you significant margins, great. Maybe push back on one or two of the LCATs just to give yourself a little bit more margin, a little bit more cushion. But if they're coming back for rates, I would push back anywhere between 3 to 5%, depending on the LCAT and depending on the location for the subcontractor. Let's see. So when you are, when the subcontractor provides you their rates, when you go to create your rate, the only thing you should be adding on top of the subcontractor's rate is your G&A percentage and your profit percentage, because the only cost that you really should have is just the administration of the subcontract. So you would not add your overhead and you would not add your fringe labor percentages on top of the sub's cost. Okay, when you're pricing as a subcontractor, this is my favorite one, because they assume that because you are a small business that you don't need as high of rates as a large business, which is true, but the large business grew from a small business because they had significant profits already built in when they were a small business to help them grow. So you never want to set the first round of target rates from the prime. You want to push back, because believe me, when they're giving you the rates, they already have a cushion set in and they already have their maximum of what the rate is, and they're not going to give you the maximum on the first round. So I would push back, you know, when they give you the rates, add maybe 5 to 7% back to it and let them come back to you. Again, even as a subcontractor, you still want to do your due diligence and do your build up from the start to make sure that the direct labor rate, you're able to afford the direct labor rate, and you are able to keep the employees, pay for their health insurance, pay for the benefits, and cover some of your costs. All right. Again, prior to submitting the proposal, make sure that you have the past performance to support the work. Make sure you've researched and done salary surveys for the areas that you're in, because there are differences in areas. So you may have a higher rate in Boston than maybe you would in Ohio. So you just want to be mindful of that when you're pricing it, and make sure that you know the locations that you're working in. Also, when you do the salary surveys or you do your research, always keep that backup documentation, because if you're awarded the contract, you want to know what is the max salary that you can provide these people, and you need to provide that information to your human resources department. That way you're not hiring someone above what you initially priced out at. Also know that you should not submit every solicitation, even if you get started on it. Sometimes you do have to say, you know what, this is not the right opportunity for me, and that's okay. Just make note of it, make note of why you didn't go after that opportunity. And I think that's it. Everything else is just about trusting your gut. But basically, when you're doing pricing, you want to make sure you have the backup documentation, especially if you're dealing with government contracts. They're not dealing with doing DCA audits right now. They've always been backed up, but you still want to have the backup documentation for yourself so you can sustain it. And then as you add on multiple contracts, you're able to play with your overhead fringe and G&A rates in order to make it work. And so you are able to get to opportunities and be more competitive. And that's all that I have. And we're ready for questions.
Well, we do have some questions that did come in, but I do want to say thank you so much for sharing that knowledge. I think the biggest thing for me was when you were talking about how to wisely go through subcontracting when you're aiming to be the prime. You know, relationships are a big thing right now, especially when we have more people going into developing their small businesses. We had the issues that happened with the pandemic when it first peaked in 2020. So learning how to effectively maneuver through relationships and even how to manage out money and how to do that in a wise sense, I think that was pretty much a take home for me. That was very, very incredible. So without further ado, we do have, this is now your time to ask Tenilla some questions. You know, I don't know when you'll get this chance again to ask her all the questions about pricing. Probably next time she might charge you. So this is the time to ask questions. In the meantime, I am going to, again, put up three things: a link to the Morgan EDAC platform, so that way you guys can peruse our other topics and other events that are coming up for our program. And I'm going to post the webinar feedback form, so that way you can post what other content you would like to hear about in the future, as well as a link to Tenilla's company website for those of you that want to get into some more of what Tenilla is going to be accomplishing in the near future. So the first question I have, and then we'll move to Shanita. I see your hand up, and we can just popcorn it from there, and I'll pay attention to the audience. Tenilla, your first question that came in was, can you define wrap rate, please?
Yes, so wrap rate and multiplier are basically the same thing. So all they're saying is the wrap rate is going to be your G&A percentage, your fringe percentage, and your whole overhead rate percentage added together. It just makes it easier when you do if you're doing a quick multiplier off of your head, right? So let's say 30, 30, and 30, that's a 1.9 multiplier. So that means when you take your rate of $25, if you're out somewhere and you can't just do your build up quick, you don't have the time to sit and do the build up, you can say, okay, in my head, my multiplier is a 1.9, let me do that calculation. And then that's when you start negotiating from. But the key is knowing what your indirect rates are. So your indirect rates will determine your multiplier or your wrap rate.
Thank you. And I think Shanita, you had your hand up.
Yes, thank you. And hey, everybody. First, this was phenomenal. My head is spinning, and you did an excellent job. What I want to know is there a beginner's class? This seemed really advanced. It's all very good information, but I feel like I was dropped in the middle of a conversation, which, like, I'm not familiar with all the terms, the wrap, this, the that. What can I do as a beginner in this federal government contracting world to introduce myself to all these different components of pricing?
It's just classes. I know I've taken several classes at George Mason University, and they actually had government contracting.
Okay.
So yeah, and they'll take you through the whole thing, not just pricing, so you get a complete understanding of it. So that was a whole, I think I did that for a week. And so it's a lot. And so I tried to make the presentation from the beginning. That's why I felt like the beginning was like the stones. But yeah, so if you do that, and then also Google, if you have time, just do some Googling on GCA, government contracting. And then also there is a software called ICAT, ICAT. But with that, the owner of that software, he's well versed in government contracting. So as he's talking about his software, he goes into the principles of government contracting as well. So you get a full understanding of what the indirect rates are, what the pools are, what the breakdowns are, and so forth. But it's just a matter, I'm just telling you, it's just a matter of just reading and attending classes and talking to people and just asking questions.
Okay.
And make Google your best friend as well.
All right. Thank you so much. Again, this was phenomenal and I learned a lot. I just want to put it in context. So I will be continuing the classes. Thank you again.
Right. No worries. And so I just want to reiterate, just to make sure that everyone has your foundation of your pricing is going to come from your financial statements. So if you do not have clear, concise financial statements, coming up with a pricing and being able to justify that pricing is going to be difficult. So you just want to make sure that you have your basic components of a business and your foundational and your accounting system set up so that it makes it easier just for you to be able to pull the information as opposed to you trying to manually calculate it, because manually calculating indirect rates is not fun at all.
Okay, thank you.
Okay, do we have any more questions with the Google, making Google your best friend? I know not to do that when I'm looking up, what my symptoms are. So it is not my friend when it's telling me what my symptoms are. But does anyone else have any questions? If not, we do have one more question coming up, which may be your last one. So are there any tips that you have for pricing tips that you have for individuals that are just starting off their business versus those that are more seasoned in their business? Or do you have a variety of tips, or is it kind of just the same across the way?
So it's the same across the way. So if you're first starting out, your multiplier is probably going to be like a 1.2, 1.3. Never, ever, ever use anything less than 1.5 because you're never going to grow. If you can get away with a 1.6 rate multiplier, that is better because it allows you to grow while you're still small and you can reinvest those profits back into the business.
Lovely. So we officially end at 1:30. I don't see any hands up. So Tenilla, if you have any other parting words that you would like to share with us, we can adjourn here. And remember, everyone, this will be available for this recording will be available on the Morgan ESU. Wow, let me get my words together. The Morgan EDAC website. And as well, if Tenilla, if you're willing, we can also share these slides with the individuals here as it has been requested. They are definitely valuing your material.
Sure, not a problem.
Well, thank you all for coming today. Tenilla, do you have any last minute thoughts for us?
Just want to say I wish you all the best. And I know as women, I want to say as women, and I see it because I'm working in a male-dominated field, do not be afraid to push back and know your value or what your rate is, okay? Because I see oftentimes when we do not negotiate, and I'm dealing with the employees as well, they do not negotiate the salaries and they could get way more than what they're asking for. So I want you to be confident in the service that you're offering. Make sure that you are requesting the highest rate that you can get because any other company is going to do the same. And just make sure that you're putting you're making the best financial decisions based off of you and your business and not anyone else, right? And that it's okay to turn work down because what's going to be for you is going to be for you. So just one closed door doesn't mean that there won't be another one. So make sure you demand what you're worth. And I wish you all the very best and success.
Thank you so much. Are you available for coaching or mentoring?
Well, I don't know. I'm not.
Oh no, come on.
I am not. I try my best to give information, but yeah, I don't have a problem with asking questions as long as the questions don't exceed 5 or 10 minutes of my time.
Okay.
But yeah, like the long extended, I just don't have the bandwidth.
Okay, that's fair. Can we get your contact information?
Yes, it's actually on the slides. Email is let me go back to the beginning. It's tjones@JLC. There you go. Can you see the slide? tjones@jlcandassociates.com.
Perfect, thank you.
And then if you would just put in the subject that is from the webinar, because just so I get, it's a lot of spam, so I want to make sure I won't miss it.
Yep.
I do have one final question, if I may. When you did your first one, how long did it take? Did you have to do 2, 3, 4, 5 before you actually got the contract, or you got your first one?
So I just do the pricing piece of it, right? So then with my company, we do the pricing. So once we set the pricing, it's up to the owner to determine where they're going to go with the pricing. So no, we don't win all of them. I can tell you that. And so it's just a matter of sitting down and getting the information, right? If you know the customer is going to be your best resource. They can't tell you what the pricing is, but they can give you the ballpark of where you need to be, right? And so you just want to make sure, again, I'm going back, you want to make sure that you have your financials up to date, because that's going to reflect what your actual expenses are. If you don't know what's going out, then it makes it difficult for you to present a reasonable price that you know you can sustain and maintain your employees. I really didn't answer your question because I've been doing it for so long. I'm not sure if I'm sure it wasn't the first one that I won. I have losses. So I'm not sure exactly how long it took me to win a proposal. But I know a lot of times with me, it's intuitive with me. So I'll look at it and I'm like, this doesn't feel right. And I'll either say we need to go lower or we need to go higher. So that's why I say a lot of stuff you have to trust your gut and knowing what's the right price. I also do a lot of research. So I will go in before I even start my pricing, just like the information I gave you all, I actually do those same things where I'll read this, go through the solicitation, get what my top value should be, right? Then I'll Google, find out who the incumbent is. Even if the solicitation, the Q&As do not tell you who the incumbent is, if you just take a little bit of time to do some research, you can find the incumbent contract. So then I'll get the incumbent contract information. I list that value on a spreadsheet, and then I just start building from there. And then I just always have the max value and the incumbent contract value in front of me. So as I'm playing with my pricing, I know where I want to be and where not to be, if that makes sense.
It does. Thank you so much. I appreciate that.
No worries.
All right. I think that we can adjourn here. Again, the slides and the video will be available at a later date, and it will be posted onto the Morgan EDAC website. So thank you all for coming with us today. I will stop the recording now.